Hello, everybody. Welcome to the Two Stewards Show. I'm here. My name's Mark. I'm here with Brent.
You got that right.
That's the first thing I got right all morning. This is our third take of the intro, so hopefully we make it through this episode.
All right.
But yeah, Brent, we were chatting a little bit about some, about real estate. Go figure.
Yeah.
And some recent offers that you were making.
Oh, man.
And achieving or not achieving. So how's that working out for you?
Just
like Dr. Phil. How's that working out for you?
Stick the knife and twist it. Yeah, no. Well, thanks for joining the Two Stewards Show to join us on this very exciting journey. So,
is it that exciting?
I don't know. It's going to be. We're going to make it exciting. Right?
Oh, okay.
Yeah. So we were offering on properties, which is kind of typical when you're doing that for a living.
Yep.
And just keep thinking like, hey, we're offering on a property that's like a single family home in a nice neighborhood. The intention is it's an investment property, right?
Yeah.
But it's like, how do you come to a value of a home? And it got me thinking like, okay, so, typical approach is I want to buy a house. So let's look at some comparable houses that have sold recently. Okay, well, that one had a garage, so that, this one doesn't. Well, let's do the math. Let's see, okay, well, what's a garage worth? And then you kind of come to the value, right?
Well, there's two ways typically, right? One is comparables.
Yeah.
Which is for most people who are buying a home for themselves. Like, what did other homes sell for? That's what we're going to price this one at, and that's what it's kind of worth. And the other approach is the investor approach, where you hopefully sit down, run your numbers, do a pro forma, and be like, okay, here's the rent I could expect to achieve. So this is what I can put in, and therefore my maximum price is X. Right?
Yeah, exactly. So like how do you actually value a home as an investor? And I feel like that's been changing over the last 10, 15 years. And we were kind of chatting about this off the air because like a single family home in a nice neighborhood 15 years ago, the buyer pool for those homes was a lot more just homeowners who wanted to move in, young people looking to get a house, start a family, whatever. And I feel like that's really shifted in the last 10 years, 15 years, to a higher percentage of investors who are valuing these homes with like a different lens, right? And that's the lens, that's the second kind of mention. Like you mentioned comparables, and you mentioned like income approach to valuation.
And that's probably usually a higher price, I feel like.
Yeah, but like I feel like we're in this transition period, and I'm saying like a lot, so I don't even know what I'm doing. But we're in this transition period between where homes are being valued as homes that are comparable to the one down the road and being valued as investments in terms of how much income they can produce and how valuable they are to somebody who's just going to own this as an income producing asset, right?
Yes. Sorry, I just want to interject. I think
you got a smile on your face.
Wasn't that one of the Knights of the Round Table, Sir Like-a-Lot?
Oh, shoot. Oh, man.
Anyways, you can... well, like today, right?
You just lost all of our first-time listeners on this episode.
Yeah, well, at least they know what they're in for, right?
Yeah.
Like, I feel like nowadays you don't see many people named Lance.
No.
But in the Middle Ages, people were named Lance a lot.
Yeah, they also got lanced a lot. So, okay. But at least in the Middle Ages, they could afford a home, could they?
No,
okay,
they couldn't.
So things have changed. It's actually pretty good right now. So stop complaining.
I mean, we're heading back towards that. You hear people talking about sort of feudalism, right? Where you've got like the rich and the poor and nothing in between. Yeah. But why don't you carry on, Brent? Before.
Well, yeah. So just
before I make more bad dad
more
jokes.
with my musings here. So,
which is very amusing.
Yeah. So how to value a home? It seems to be changing, right? And if you have the lens of a homeowner going around, I got to just buy a house so I could live in it. And you're looking at the house prices going like, are you serious? That just goes for that? Like, what? Are you crazy? You almost have to put that other lens on to see what's going on, right? And I don't think it's all necessarily like hype when things go over asking, when people are trying to bid on properties and they're going past where they think is reasonable for that property, right? Yeah, as a single family home, probably doesn't make sense, right? Because you can't really afford it. You're going to rely on your income to pay the mortgage. And at a certain point, you just can't do it, right?
Yep.
So even if you have family helping you, or like two people are going in together to buy it, just doesn't make sense. But as an investment property, it might make sense, right? Like if the numbers pencil out and somebody wants to own this for 30 years, they have a little bit of a different lens. Like they're looking at, in 30 years, is this going to be like the best use of my money? And if you're looking at it through that lens, you can afford to pay a different price.
Yeah.
So I don't know. I've just been struggling with that, trying to figure out, okay, what is this transition that's happening, and is it real? Is like,
Well, and then how does it affect what you're going to offer, right?
Exactly.
If they want another, I don't know. You're saying you've kind of got people going back to you saying like, oh, you're in the top, whatever.
Yeah.
You're in the top 9 out of 10. Do you want to make another offer?
Yeah, right? yeah.
Silly games that people play.
Yeah, you just offered, and you're in the top 3 out of 5 offers. Like, nice. I'm in the top 3. So,
oh man.
Yeah, I know.
But yeah, then does it make sense to throw to offer another 20 grand?
See, that's the thing, right? Do the math. As a homeowner, it might not make sense, but as an investor, we basically look at the monthly carrying cost on that, right?
Yeah.
You kind of put the price aside for a minute. What's the monthly carrying cost? Well, on extra 10 grand on your offer, that's like $40-$50 a month.
Yeah.
Well, is that going to make or break your investment? Is that really important? Like, and that's where all those numbers just start feeding into your calculation to determine, okay, well, if I spend an extra $40 a month, I can get the deal. And for investors looking at this, getting the deal is what they want, right? They want their money in the market, and they want to own something because they look at a 20-year timeline. They're like, well, if I own this house, it's actually going to be going up in value. The debt's going to be paid down by someone else. They're going to keep printing dollars. Houses are denominated in dollars. And I'm going to be on the upward side of what you just mentioned before, like the rich and the poor in the feudalism society we're headed to.
Sir Lancelot. Buy lances. I'm going to start a company making lances, I think.
Just carbon fiber, super.
So, yeah, you have that mindset, but you also have the other sort of mindset where, like...
Just sounds bad because it's like, well, everyone should offer a lot on properties. It's like, well, no.
No, I don't think that's what you're saying. But then you've also got people who are like, they want another 10 grand?
Yeah.
Right? Because when you say $10,000 or $20,000, like that's still a lot of money.
Yeah.
I don't know. For folks like you and I, anyways. Sorry, for folks like me, maybe not you.
Oh man.
Right? No, but that's still a lot of money. So then it's just that sort of sticker shock of another 20 grand. Like, no.
Yeah.
You're not putting it into context.
Yeah.
And there's, I guess, also the idea that, like, okay, so now it's another 10 grand.
Yeah. What did you say on your groceries? Like $10,000 on a house, like that's 1 point something percent.
Yeah, it might be 2-3%.
Yeah.
Right. So would you pay another 2-3% on your groceries? Yeah, you would, because you need it, and like you're going to eat.
Inflation will take it anyways.
Yeah.
So.
So you look at it that way. It's not such a big deal. But when you're talking about 10 or 20 grand in cash, like, oh, okay, that is like.
Yeah.
That is, and part of the problem is, I don't know, not this problem, but part of a problem in general, I think, is that people, we've talked about this before, people think in terms of payments now, not in terms of purchase price.
Yeah.
Right? So what can I afford? So here's my income, and then, here's the total payments I have in my life.
Yeah.
And not looking at total obligations, right? Like that $1 million home, you're not looking at that. You're just looking at the payment. And that's where people got into trouble with low interest rates that are now not as low. And then, like, are they going to drop?
You can buy an expensive home, but your payments might be low at the low rate. Yeah.
Or you can buy 2 expensive homes. One's an investment and one's not. And, like, what happens to you, right?
Yeah.
When those prices jump up. And, I mean, I'm seeing, so common wisdom is like 2-3 interest rate cuts this year. I just saw something this morning where somebody's like, I don't know, recession, all this, maybe it's not happening. Maybe inflation is still kicking and interest rates are going to stay high, at least till the end of summer.
Yeah. Well, okay, so this is another thing that I've been thinking about too, is constantly being an armchair economist and trying to plan out your next moves when you're investing. Like, in a certain sense, we're kind of forced to that because you want to make a wise decision. You want to deploy your capital into the right thing at the right time. but it's like every month that goes by that you don't deploy capital, you're also losing out on opportunity. So there's trade-offs on both sides, right? Sit around for 2 years waiting for rates to come down or up or whatever to get in at the right time. And for those 2 years that you're waiting, you're speculating like every week you're, oh man, like was now a good time? Like you're living in this, short-term thinking mentality that's probably going to drive you insane. It'll drive me insane.
I mean, I'm most of the way there now already. So, but I mean, with stock investors, they have that saying, right? It's not timing the market. It's time in the market.
Yeah.
And actually, as it turns out, timing the market is like a much better strategy, much more effective strategy when you actually go back and look at the numbers, right? If you invested in these certain times, you would have made much bigger returns.
Way better.
But the point is, you can't predict that.
Yeah.
Right? Even if you're really smart, like everybody that's really smart and has made really great predictions. Think of Michael Burry with the great financial crisis, right? He's also had some misses.
Yeah.
Right? And like when
Didn't he have a crystal ball though? They sell on Amazon for pretty cheap.
Okay. So, I mean, if it's cheap enough, invest in it. Right? But the point is, trying to time it, more often than not, you're going to time it wrong.
Yeah.
Or you'll just wait. And again, with inflation running hot, you're losing your capital.
Yeah.
So, if that works for stocks, I think it maybe works for real estate. Like, it's time in the market, because in 30 years, when you look back on this property, if you're doing a long-term buy and hold, big difference.
Yeah. So having that perspective, but how do you get that perspective? How do you look 30 years? Like, that's a long time for most people to think.
It is.
To zoom out, right? And have that perspective.
It's super hard. And like because I'm in short-term rentals, we're a little more focused on sort of the immediate.
The business of it.
Yeah, the business. And we're not, we can look like, 30 years down the road, but our immediate concern is cash flow. And what people typically will say there is you make your money when you buy the house.
Yeah.
So it's pretty important to get a good deal on that, because that affects your cash flow right from the outset, and cash flow is what you're after when you're doing short-term rentals.
Yeah.
So 10 years down, 10 years down the road, if this property is not working anymore, like if we're looking at the portfolio and rebalancing, like you're just going to sell that property.
Yeah.
And if you make some, like chances are you're going to make money on it on the equity side. And if you don't, like whatever, I got my cash flow out and that's it.
Yeah.
But that's, if you're a long-term investor.
I think it's about an investment thesis. As a long-term investor, you have to have a mindset around what is the reason I'm investing? What is my investment thesis here? What do I believe to be true about housing in the area that I'm buying, and why am I doing this? And what are the forces that are going to affect this investment? And don't zoom in on rates could come down next month. Well, anything could happen in the next month, but over the next 30 years, is this a good decision or a bad decision, and why? And form that thesis. And almost every person who wants to invest kind of has to do that for themselves. I mean, we've been forming ours too, right? It's
your thesis, and it's kind of where you are in life and your risk tolerance and what you're looking for out of your investment, right?
Yeah.
If you don't have a business to invest in, well, the next best thing in Canada is real estate. But that's with a mindset, of long-term buy and hold.
Yeah.
If you're in Canada, you need to have that mindset. I think the short-term stuff doesn't.
And that works too, long-term buy and hold, because in reality, the reality is homes are changing, right? They're, we just chatted about, homes are changing from single-family homes where homeowner lives in there and they can afford to pay the bills into investment properties.
Yeah.
And the city is incentivizing this. The province is incentivizing this. The whole monetary system of the country incentivizes this. And, we pull up the stats from, 2020, 1 in 5 homes is owned by an investor.
Right.
Okay, I think that trend's going to keep continuing to become more and more investors, right? So more of the assets are going to be pooled into a smaller amount of people. More of the people are going to be tenants. I think you had some data on the rents and the rental market as well.
Yeah, I mean, if you want to nerd out,
it's just a sign that the homes are changing into investment properties.
Yeah, absolutely. Yeah, so if you want to nerd out on some of this stuff, CMHC, Canada Mortgage and Housing Corporation, they do a lot of reports, and as much as we rag on government organizations, they actually have some good information in these. So, you
Well,
can
the
look
information might be good, but it might be showing you a sad reality.
well, okay, but I'm just in terms of like the actual valid information.
Yeah.
And you kind of draw your own conclusions. But yeah, so CMHC is a good one. There are lots of reports. The latest one, and they break it down by you have national, and then there's also Hamilton. So Hamilton, for example, they're looking at so this is a 2023 report, and then they're looking at housing activity for Hamilton, for example. So they expect construction to start on a number of condominium apartments that were sold before last year's market downturn. So they got the money, they got it. They're going to move ahead with the project. Pre-construction sales of new single detached homes, many of which were priced above $1 million, were most negatively affected by mortgage rates last year. So builders likely are going to build fewer homes next year. Very weak levels this year. Gradual recovery. They're talking about delays in condo pre-construction.
That's the other thing. You don't see
projects,
single-family homes being built.
No.
And the ones you do that are detached homes are these monsters, right?
Yeah, I mean, I guess the problem is for a builder, right? You have some fixed costs in terms of land, and then and then even for construction, there's relatively fixed costs. Like you got permits, and then like what it costs to build a foundation. That can vary a bit, but there's a lower level. What it costs to frame a house. There's depending on even the per square foot price, there's a lower level. It could go up, but it's not going to go below there.
Yeah.
So then when you look at it, like what am I going to make more money on? Can I build a single family home?
That's like 1,000 square foot bungalow.
Yeah, you can't build those anymore because of the cost of land and the cost of construction. You're not like the price.
You can build them, but you're not going to recover.
Or the price that you would have to charge for it. Like nobody's going to buy that because they can go buy an existing home for $200,000 less.
Yeah.
So what do? You either build a monster home, where you can charge more in finishes and everything else, and people they get it. It's a big home. We're going to pay more, or you densify.
Yeah.
And that's typically what you see. Outlying areas of the city.
Yeah.
Is
all like the new development land on the outskirts of the city is all stacked towns.
Yeah, and that's
mid-rise.
cheaper land. And I mean, keep in mind, this is land that was probably bought 10, 20, 30 years ago.
Slated for development.
Yeah, and they've just held on to it.
So you almost have like, let's say a city like Hamilton, then you have an outer ring of development land that's all higher density.
Yeah.
And then the inside is low density, big lots, old kind of single family homes. And those are the homes that we're looking at going, well, they're transitioning into investment properties slowly, right?
Never see never see a bigger single family home on that lot unless somebody has some cash, they like the neighborhood, and they just need a bigger home.
Yeah.
But even that.
But it's almost backwards from how you think a city should be, right? You should have your density in the middle, and then
that's right.
Less, but it's we're developing land backwards. But that's why you see the value change, like the way that people approach valuing these properties is changing too, right?
Yeah.
It's not a single family home anymore. It now has the potential, like because you can build multiple units on it, right? And these new policies that come out, and every municipality has kind of their own thing, but if you can build 4 units or 6 units on that plot of land, the mom and pop, or not mom and pop, but like that person looking for a home to live in, like a principal dwelling, they're not looking at, can I buy that house and put 6 units in it, right? They're looking at, can I buy that house and put a hedge and some landscaping in here and put a deck on and maybe a little pool in the backyard or something.
Yeah.
So to them, the house is worth a certain amount, but to somebody coming in who says I can put 6 units on here, it's a totally different method of valuation, right? Their thinking is way different, and more of those people are looking, right? Now they're 1 in 5, but I think they're going up. And
the data shows that investors. So 2022, I think, was the first year where there was more just for new construction, there's more purpose-built rental units built than stuff that was aimed at like homeowners, people who are just buying it to occupy it.
Yeah.
So that's a change, right?
Wait, so
Much
say
more,
that again, because that is
so more rental stock than owner's stock
on the new
being
builds.
built on new builds.
Yeah.
Right, because that's much easier to track with permits and all that.
Since that's the first time that
first time ever in Canada.
Okay. That's pretty important.
Well, since we started,
since
they have data for us. So maybe in the 1870s, I don't know.
In the feudal ages, Middle Ages. That is a big point to drive home, right? That they're building now more rentals than owner occupied.
Yeah, and probably that's skewed a little bit because that's that's in new data, stuff.
So it's skewed.
No, but that's in new construction. So if you look at the overall market, you have a lot of rentals being built as well. Like if I buy a house and then I duplex it and I live there, but I rent out the basement, that's not included in that data, but you see a lot more of that happening too, right?
Right.
House hacking, I guess people call it.
This is just new builds.
This is just strictly new builds.
So, and that's pretty significant too, because the financials before, like in previous years, it didn't make sense to build a new building as a rental. Yeah. Because the income from it wouldn't justify. It was more profitable to build it and then sell it off as condos or whatever, right? Yeah. And then the developer could make more profit. But now you're saying it's more profitable to build it and keep it.
So I don't know what kind of units those are. Yeah. Okay. Right. The condos are a separate line in that graph. And they're being built, and like condos are heavily
classic. The Two Stewards show investor giving you misleading information.
That's what we do here. It's entertainment value only. Okay. No, but condos are heavily skewed towards investors, right? Yeah. Up to 2/3 of condos are bought by investors. That's not surprising. Well, I guess, but like, who wants to buy a condo to live in a shoebox? Yeah, like 1,000 feet up in the air or whatever, right? Yeah, maybe not that high.
Tenants are more driven to that, right?
Yeah, yeah.
It's short term. I'm here for the 5 years, and then
and you're not moving there with your family. Yeah, you're not going to start a family in one of those. Yeah, I mean, people people have to.
That goes into that story about the 330 square foot homes.
Oh.
That will house families. What is it? Yeah, if you have 5 people in your family and try and fit into a 330 square foot home.
Yeah, but what is this? The government is now, they got a program or something to subsidize or to build. I don't even know how they're doing this, if they're actually building it, but their focus is on building these 330 square foot units, right? Yeah. I think Chrystia Freeland just announced that. And that's going to sell for what, $1,600 or something? Yeah, I know, you should. I just read, was it Desjardins put out an article that Canada is unlikely to meet the deficit goals. Like, oh, what a shocker, right? The deficit was supposed to be kept to $40 billion a year till 2026 and then decrease, and current rates looks like it's going to be $47 billion this year or more. Oh, so that's only, 20% increase to the deficit, but who's counting, right?
Oh man.
But yeah, it is interesting to see the skew towards investors away from homeowners. Yeah. And I mean, that I think it just makes sense because as the money supply expands, assets increase in value. Yeah. And those assets become harder for people who are relying simply on income, because as inflation also increases, your income will buy you less. So if your primary asset, quote unquote, is income, I talked about this before. Yeah. Like that's being eroded. Your ability to purchase is being eroded. But if you own other assets,
at least you're kind of keeping up or whatever.
Well, your ability to, like, you're growing equity, so that's benefiting you. Yeah. So now you can take some of that equity and buy more homes. And this is why investors are buying more homes, right? People, I think, often have it backwards. They're saying, oh, these investors are driving up prices. Yeah. And to a certain extent, there would be that effect, right? Where we talked about an investor's willing to pay a little bit more.
They see the potential in the house and it's worth more to them anyways.
But that's not the primary driver here. The primary driver is inflation, money supply increase, which benefits investors. So, of course, if you bought real estate and it increased in value and it did really well for you, you're going to buy more.
Yeah.
Right?
Yeah. It's like self-fulfilling.
Yeah, of course you are. So I think that's what's driving these numbers of more and more investors
You're not saying whether or
buying
not
properties.
that's good or bad, and like this.
I mean, it's good if you're an investor and you're trying to
but it
feed
does
your
contribute
family,
to this wealth disparity.
but it's not good. Yeah, nationally.
Like our
it's not
pursuit
good.
of the Middle Ages is coming to fruition.
It is.
So I think my son really wants to live in the Middle Ages because he's always talking swords and shields and So I think he would fit right in.
Well, that's terrible, Brent.
Yeah.
You're just developing a violent patriarchal type of child, aren't you?
Oh yeah, I know. But that's the thing. Renting is kind of the only viable option for many young people, right? And
Yeah.
I don't know if that's.
Exciting. That's what we hear. So also in this CMHC report, they're expecting up to 20% rent increases in 2024. 20%. So like on unit turnovers. I don't know if that's consistent with what you're seeing.
Well, I think their stats would probably be like average. Our units, so we do long-term units, but our units are generally like a 2 to 3 year stay.
Yeah.
And then people turn over. So the rent
Blueberry?
is not, cherry
Okay.
turnovers. But the rent has gone up, and in some, like in a couple cases, the rent's actually gone down a bit because you rented on the peak of like,
of COVID.
Yeah, and the nice, right in the middle of the hottest market in the spring, summer kind of thing, right? And then now in January, you're renting it again, and it's slowed down. So yeah, it's actually dipped a little bit.
Yeah. Okay. So it
From the
depends
peak,
on
so,
your.
Yeah.
But they're talking about 20% year over year. So that's 1 year price increases. So we'll see. We'll see if that happens. Interesting. But so you brought up young people, right? And I mean, that's the common trope.
Around you, I just feel young,
I'm glad I can have that effect on you. I make people feel youthful. No, but the common idea is that
you will own nothing and be happy.
Yeah, exactly,
Yeah.
right? And so, sure, we can see that kind of being fulfilled, but it's doom and gloom. Young people will, basically, if you're a young person, you'll never own a home, right?
Yeah.
There's no way. And so we were talking about this before the show a little bit too, right? That doesn't exactly square with our experience. And I mean, that's limited to sort of the people we know.
Yeah.
And so this is sort of anecdotal, but I think it's instructive because it's not 100% true, right? I have young relatives who have bought homes recently, and there's.
Well, this conversation maybe stems from this article that in Better Dwelling is like Canadians present a major threat if they realize they won't own a home from the RCMP. So the police police worry Canada may be destabilized if young people realize they won't own a home. So I don't know how like out there this article is or whatever, and maybe there's a counterpoint to it. But the fact that we're writing stuff like this and talking about how there's going to be an uprising if young people actually wake up and realize they actually really won't be able to own a home and they're going to cause havoc and the police are worried about it.
Well, so I think it's a little bit overblown, and like if you're, this is what the RCMP should be doing, right? They should be
giving homes to young people.
No, but they should be looking into the future, identifying trends, right? If you're the military or police forces, you kind of have to war game.
Yeah,
or
what else are you
do,
doing with your, fiat funded?
Yeah, how else are you going to blow the dollars?
I shouldn't throw the.
No, but they should be looking
at
at future trends to see what's happening, and they've identified this trend of discontent in popular unrest.
They probably listen to this show.
Probably one of the primary. Listen, RCMP, if you're listening, this is entertainment value only. Okay.
I don't want to see any more news articles about the unrest.
But and I'm sure they have a million different scenarios that they're looking at, and this is the one that's getting some attention. But it is an important point, right? In North America, we have an idea, which is not as prevalent in Europe, of, you go through life, you do all the steps, and you buy a home.
Yeah.
right? That's ingrained in our culture.
Yeah.
And it's starting to not happen now, right? But I mean, this has been more common in Europe. So that transition is difficult for people to kind of wrap their minds around.
Because it's not only a financial transition, it's a cultural one.
Yeah. And of course, people are going to be upset, right? When you have transition, they'll change well. So yeah, it's a big cultural change.
See, that impacts the young people, but it also impacts society. So like there's a quote here in this article: the transfer of housing from end users to institutional investors results in communities being reduced into yield generating assets. So if you think about the cultural consequences or the societal consequences of that happening, so what they're predicting or what they're seeing is, oh, hey, more and more investors are buying stuff because it makes sense financially to own it, and they're paying more, so that the average, end user, so that like owner occupant, the young person who wants to buy a house and live in it, is forced out of the market and to rent.
Yep.
And if that continues to happen, you get big institutional investors. So you get like not just, mom and pop investor, buy a house down the road and like, you live 5 doors down, you go mow the grass, like none of that, because that like happens quite frequently, right? But now it's big funds and big groups of people and institutional investors, big money coming in and buying more and more houses, right?
I don't know
maybe
if
it's
I buy
not
that.
happening right now, but this is what this article is kind of looking in the future.
Yeah, and I mean,
and saying that reality will erode the communities that we live in.
Yeah. So I don't know if I entirely buy that, specifically just where it concerns single family homes, because we've heard about this for years. And to be fair, big institutional investors have been buying a lot of homes. But we've also seen some pretty big failures.
Yeah.
I don't think that single
we talked
family
about one on the other show.
Yeah.
Yeah.
And so I don't think that single family homes scale very well.
Yeah,
and I'm not talking about,
of,
someone who owns 5 homes or 10 homes or even 20 homes, right?
Yeah.
You can you build a little bit of a team, and I work with investors that, and like I'm sure you do as well, right?
Yeah.
Who might have 2, 3, 4, 5 homes.
Yeah.
And like they can handle that, right?
Yeah.
Because there's still enough individual attention and the mind space to think about these homes. And that's kind of what you need, I think, when you're dealing with single family homes, whether you're a property manager or an investor, is you need to have a low enough number that you can still give it kind of that individual attention. Whether you have a team or not, but then you can pay attention to the team, right? When you scale up to hundreds and hundreds of homes, you have to look at it differently. The numbers have to work differently. Your team has to be different. You don't have that same level
it's
of
hard to deploy
attention to detail.
Like $1 billion or $10 billion
Yeah.
into that asset class. Yeah.
Yeah. So
you don't have the benefit of scale, right? Where you have one building on one piece of land with one mortgage.
So apartment buildings, sure, you can, and people have done that for years, and that works well. I don't think it works with single family homes. And we've seen a number of failures in that front in the US and Canada where it just didn't work out. And so I don't necessarily buy that this is what's going to happen. But what I can see is that more and more investors are going to have 10 homes or 20 single family homes, or maybe, 10 homes with 2, 3, 4 units in each. I can see that happening.
Right.
But you still have people who kind of care, are involved with the homes. So I don't know. I just a little rant on I don't see
that's
this
probably
mass
one of the
erosion
more,
of social.
Yeah, that's one of the more extreme examples I think they're looking at. But
Yeah,
it makes for a good headline on the podcast.
hey, whatever gets people listening or reading, right? So yeah, that could happen, sure. But I think some of what we're hearing about young people in the housing market is a little bit overblown, and some of it's probably not. But again, you and I, I'm looking at somebody right here who's a young person looking at buying a home, right?
Yeah.
Who should not be, if we look at all this information and be like, you're in your early to mid 20s, there's no chance that you could buy a home in this area, but it's still possible.
Well, the possibility becomes more and more likely when you start getting creative and using other people's money, or mom and dad to help you qualify, or friends and family to co-sign, or whatever,
Yeah.
joint venture. So
there is a strong cultural component here, right? Where you have, and
people actually want to.
well, where you're talking about where there's still sort of an infrastructure of like nuclear families,
Yeah.
or even extended families that are willing to, where you
Who
have
are
sort
supportive,
of, you have
involved.
community.
Yeah.
And so there's a couple ways this works, I think. One is, yeah, maybe there's like parents or uncles or in-laws or whatever, because typically these are people who are married, young folks who are married, which is already an anomaly,
Yeah.
right?
It was
But that's
sad,
part of
sad,
the
but true.
part of the culture.
Yeah.
So there is more widespread support for them. But there's also different cultural expectations, and the fact that you might have two young people who have the wherewithal to get married, right? You don't see that anymore.
Yeah.
Typically, right? People are in there, and I'm not the best example, but people are getting married later and later,
Yeah.
right? Not younger and younger, because of all the pressures of society and, you know, the ability to raise children and you wanting to chase careers and so forth. And like it all kind of ties
Chasing
together.
a career is like trying to get an income.
Well, so I'm thinking of, you know, we always have this sort of image of the person living in a basement apartment or some apartment, playing video games, eating pizza, right? Like that's sort of a bit of a meme that we have, but it exists. And maybe they're working at Tim Hortons or, I don't know. I hear a lot of grief from kids who have graduated from universities, which I think are other than.
This is your rant.
Oh yeah, this you could just see it starting to come up, right?
Safe spaces, trigger warnings.
Yeah. So unless
Coddling.
you're learning, not hodling, coddling, right? Unless you're training for a profession like lawyer, doctor, something professional, My contention is that universities are completely useless for
Going
kids,
on the record.
young kids. Going on the record for young kids these days, specifically for the things that you said. We've got a very fragile group of kids because of how parents are raising them, how the school system raises them now, where children don't face any adversity anymore. And if you don't face any adversity, well, then you can't deal with adversity, right?
Yeah.
We're not giving kids. I'm not saying everybody, but in general, as a society, we're not giving kids the ability to solve their own problems.
Well, maybe the housing market is that adversity.
Well, it is.
We're giving them
absolutely. Oh, yeah, okay. So they have, but they can't face it, right?
Okay.
So, well, I mean, look at we're telling kids in kindergarten, we're educating them about pronouns.
We aren't, but
public schools
school
are.
system. Yeah.
Yeah,
okay.
public school system. So, and another rant, right? If you're a Christian, you can't send your kids to public school anymore. We talked about this before, and I'll just go on record saying
So
that.
off topic, but so important. Okay.
Well, it's related to young people in the housing market, right?
Yeah.
There's a track here.
like,
right?
where are we going in
These are
15 years?
indoctrination centers. And so not only is it unchristian, but just in general, it's making kids so fragile and unstable that they can't make a decision without going to an adult or to a therapist, right?
They can't deal with reality.
I don't know, if psychology was supposed to help, then why do we have more and more people in therapy, but more and more problems in society, right? It's not helping us at all.
Yeah.
Anyways, a little bit off the beaten track, but you have this education system where kids get participation trophies. They never have to face the consequences of losing. They never learn how to be gracious losers or how to deal with loss in their own life. And these are generalizations, but typically this is how where we're going.
Yeah.
They go through high school. They go through, you have safe
Did
spaces. You have
mention
trigger warnings.
Participation trophies, or
Yeah, I just said it.
Yeah.
Yeah.
I need to get one of those.
Oh, good. We're going to send that out to all our listeners, okay? Listen, you listen to us, and you're going to get a
Email us,
participation trophy.
You get a participation
Actually, there's
trophy.
probably a little bit of adversity for them putting up with all the dad jokes. No, but then you get to university.
If you
and
want to
it's-
know how to handle adversity,
Yeah.
click on the show.
You get to university, you're a young adult now, and
Yeah.
honestly, they're still children. They're not young adults because they haven't learned any responsibility. They know all about their rights, but not their responsibility. So in universities, you have all these safe spaces, trigger warnings, all kinds of, like, I don't know. People are getting a basket weaving degree and leaving university after 3 or 4 years with, I don't know, 30, 40, like it's worse in the States.
40 baskets?
Yes, lots of baskets, so that's great. But tons of debt, right? And they're inundated.
And you can't put debt in a basket. It doesn't work.
They're inundated with warnings.
How many baskets did you make in university? We're going to have to fill those to pay the debt for your degree.
No, but they're constantly inundated with all this alarmism about climate change. The world's going to end. Everything is unstable. Everything is terrible. And so anxiety, levels of anxiety are through the roof for young people.
Yeah.
Where, like, I don't know, you shouldn't be. You're just getting started in life.
You're ready to, right now just talking about this. But how do we deal with this? I don't disagree. I think that's. I
wanted to complain a little bit more, Brent.
Keep going for a little bit, and then we'll cut you off.
No, I think you get the picture, right?
Yeah.
We're bringing up a generation of kids who are all on some kind of drug because they have some kind of problem, and we couldn't ever solve any problems through like life or parenting or anything like that. It has to be a drug immediately.
Yeah.
So they're all on antidepressants. They can't handle any adversity. I've seen a number of this type of thing firsthand.
Yeah, it's
where you just can't even talk to people because they're like, oh, I can't deal with this, or maybe I'm like old school and I'm a little too hard on people or whatever. I'd like to think I'm a little bit sensitive. But just young people in general, I think, have very little resilience and very little ability to handle adversity because they weren't ever given the tools by their parents or by their teachers or by anybody who had anything to say to them.
If they don't have the resilience, then getting into the housing market is like a wake-up call. It's like reality is, hey, you can't afford this, so, and your basket weaving degree doesn't have the income to pay for this, and you got all this debt, so you can't.
I think that a lot of people in this situation absolutely don't have the wherewithal to even think about buying a home.
Or what it takes to maintain it and own it.
If they're so concerned about the environment and sea turtles with straws in their noses, and like these are the things they spend their time and their interest on, as opposed to like, I got to learn a trade, right? So again, get out of universities, get into trade schools, is my thought. Unless you want to be a doctor, do something useful, and like right away, right there, like go to work and do something. So many young people don't work.
That actually
they can't even fathom the concept of work, and when they do, they can't believe that they have to work under these appalling conditions. I have to make coffee for people, and they're not always nice to me. I can't believe
it. And they spell their names funny.
And they all have purple hair.
Oh, well, okay. What was that? That idea that we've invested in Canada so much in real estate that we've kind of lost a decade in terms of building companies and investing. And that kind of dovetails with what you're saying, right? You have all these people that are maybe not skilled and not being productive, and Canada as a whole, our economy is not really, it's kind of,
they don't have examples either,
right?
Yeah. I mean, unless you come from a community or a family where there are people who are like, I don't know, hardworking and have jobs and actually are creative, and it can be role models to young people, right?
Yeah.
But, so all that said, you have this sort of generation of fragile kids who can't even think about possibly getting into the housing market because, A, they can't save up any kind of down payment, especially if they've got a basket weaving degree and now all they can do is work a minimum wage job somewhere. No, but you get my point, right?
Yeah.
There's all these social justice degree, just garbage. It's all garbage.
Yeah.
And not only is it useless for the people who have those degrees, but it's toxic for society.
Yeah.
And it just reinforces this culture of fragility and, crybabyism and depending on the government for everything. So when you're out of school and you realize, the government's not going to help me buy a home, what am I supposed to do?
Well, they say they will, right? Like they do all these new
build
things.
You a 330 square foot
they borrow your future money. Yeah, they
Yeah.
borrow your future money to spend it on initiatives to get voted in again.
Right. And also, a lot of these young people don't have good family support structures, kind of like we're used to. You have a church, you have a community,
Yeah.
people grow together, right? When you don't have that, well, then you have your immediate family, and the immediate families tend to be pretty small,
Yeah.
right? 1, 2 kids.
If they even identify as a family, I guess.
Yeah. But again, we've seen examples of young people who are able to buy homes and who have some wherewithal and some support to do this. But yeah, it's probably not the norm anymore, I would say.
Yeah, I just pulled up this article based on kind of what you're thinking. Like, Canadian standard of living plummets lower, approaching lost decade. And that's from the National Bank of Canada. And it's talking about productivity and real GDP per capita, right? Saying like, real GDP per capita is the inflation-adjusted value of an economy's output divided by the population. Does that make sense?
Yep.
Okay, so then we know that rising real GDP is generally a good thing, since higher output tends to correlate with increased national wealth. However, in rare cases, a country's population growth will outpace its output. So we've kind of stagnated as Canada, and I think in part because of the population dynamics, but also just the lack of investment in like entrepreneurism and like companies and too much investment in real estate. And that kind of dovetails with what you're saying a little bit, the young people not being able to get in. Does it?
Well, I mean, I guess.
Okay.
I'm saying that if young people were more resilient, they would still find a way to get in.
Yeah.
And I don't know.
So email Mark if you're a young person looking for the solution. He's got all these really good, cheap homes.
Well, but it's not cheap. But I mean, do you see, I don't know, you see young couples who, on one hand, you got a young couple who's starting life and maybe there's a kid on the way or something. So there's some urgency.
Yeah.
Here's another thing, right? Nobody's having children.
Yeah.
And if you do, you're having one or half. I don't know how you have half a kid, but
could you say children are self-imposed adversity?
They are a little bit.
Yeah.
But people are so frightened of the idea of having children, having to care for another person.
I did a showing the other day and the tenants came in. I was like, oh yeah, like you have kids? I never know. Like, no. I'm like, okay.
Oh yeah.
Whoa.
Yeah. Like, number one, children are a burden. We're seeing that. And part of that is this environmental nonsense where like humans are a plague on the planet. So we should have less kids, right?
Yeah.
It's like, no, we need more kids. We need big families.
Yeah.
But anyways, the idea that, I have a kid on the way. I really need to like get my butt in gear and get a good place for us to live.
Yeah.
Is one thing. So you don't see that with, certainly with a lot of people. But they're getting married later. And then the idea of buying a fixer-upper, right?
Yeah.
Like, to us, that's like, beautiful, right?
Yeah.
And probably a lot of people that we know, and some of the young people that I've talked to, like, that's their strategy, right? They're going to maybe get a little bit of help from their parents, but they're also buying not like this beautiful, gorgeous home with granite countertops and everything else, because like that's reality. They can't afford that.
Yeah.
And that's not something we past generations ever expected, right? You get older, you have a little more disposable income, you can have a more comfortable home and make it nicer for you and your kids. But that's not where you start. But that's where people have this expectation that they deserve everything.
Yeah.
Because that's all they've heard from their teachers and from everybody else.
But you're not saying is that young people, if they are resilient and are prepared to take the bull by the horns and do stuff, that they might not be still faced with a decline in standard of living, right? Like we always talk about how because of inflation, our standard of living is being forced to decline, right?
Yeah.
Like we're being forced to spend more money on fewer things and poorer quality things. Like, for example, smaller housing units for double the price. Okay, that's inflation eroding your standard of living. So it's a reality for everybody. And you're saying like, young people can be resilient and maybe get into the housing market, but they're still going to be faced with that reality that they can't control either, right?
I mean, so a lot of it's a matter of perspective.
Yeah.
Right? I'm a little older than you.
A little.
But when my parents came to Canada, before it was called Canada...
Yeah, this is... Upper Canada or lower?
No, but like when they got married, they lived in like a room above a garage or a barn or something, right?
Yeah.
And they had, there was a couple kids, and like they were in the corner in cribs and bassinets or whatever, right? Like I don't know if they had running water. And this is an age where there was running water. Just it was a rural property, didn't have all that stuff, right? So our expectations, I think,
have spiked since then.
Yeah, because we have such an affluent society, and we're used to certain things. And I'm not saying everybody has to go live in a barn with no running water, but like maybe you can temper your expectations a little bit, and maybe if you do have kids, every kid doesn't need their own bedroom, or you don't need such a you don't need such a big place, right? And you can deal with that for a few years or a bunch of years, right? Whatever. The emphasis is on material goods and the size of your home and the granite countertops and all this stuff. Like, doesn't really matter, right?
Yeah. That comes back to the whole thesis behind like why we're doing real estate investing is not for material goods. It's to use what we have, right? The stewardship mindset.
Yeah.
Take what we've been given and use it well in the context of the current system that seems to be transitioning away from single family home stuff into higher density stuff. Use inflation, use that whole thing so that you can be a bigger blessing to other people and help the next generation, like get them set up or at least be an example or teach them, right? Have more time freedom to be able to do those sorts of things too.
Well, if you have kids,
Mark, if you're so wise, you should.
I never said I was wise, Brent. No, but okay, you got to use your brain a little bit, right? Like you look at big trends. You can't fight the big trends.
Yeah.
Right? You can rail against them. You can yell at them like I do, right? Go
start a podcast.
Yell at windmills like Don Quixote. But start a podcast. I mean, that's something you could do. Start a podcast and just, yell at people. No, but you look at the trends, and like if this is the trend, well, I'm going to go with that trend. Like it may be unfortunate, and it may not be a symptom of a great society, but this is where we live. We have to be responsible. Yeah. And if I have kids, if I want to be able to help them out at some point, if I'm still renting and have no assets, and my only asset is my income, which is diminishing every year, I'm not going to be able to help them.
Yeah.
So that's, to me, that's not a great scenario. So I need to maximize what I got now. And if that means a little bit of pain.
If the responsibility is like, you see the writing on the wall and you do nothing, well, okay, that's your fault.
Yeah, you're going to run into that wall.
Yeah.
So, sorry to all the young people out there that I've offended, but maybe this is your wake-up call,
listeners.
Stop worrying about, sea levels in Mauritania and worry about, cleaning up your life and doing something important with it.
All right.
I'm not saying that buying a house is one of those important things.
One of the most important things is probably emailing our show and asking for a participation trophy.
Listen, when we open the swag shop, we are getting participation trophies. Okay, just putting that out there. All right. Anything else you wanted to talk about? Hey,
Mark's checking item 2 on his list.
Yeah, I wrote a list.
What are we in?
So that was point 1.
Okay.
And for our second point of the sermon.
You got anything to add as a young person?
Okay. So, a couple quick things.
Quick things.
I mean, they're never quick, are they?
Well, I'm assuming most people listen to this at 2 or 3 times speed because I can't listen to it at less than 1.5.
I usually do.
Oh, man.
Okay, so just something related to what we're talking about, and I thought it was kind of interesting, and it's not related to real estate, but about self-esteem.
Okay.
And so I don't know, I thought this was kind of interesting. So Vodi Bakum, he's a preacher. He's out of the States. I think he's actually in Africa now. But he was talking about self-esteem, and his point was like self-esteem doesn't exist.
Yeah.
And people talk about I have low self-esteem, and this is on my rant about young people and how they have self-esteem. So we have to do, we can't possibly. He's like, no, that doesn't even exist. Self-esteem, right?
And you're like, wait a minute.
The Bible
what?
says no man hates his own flesh. So that's a good starting point for us, right? Even if whatever you think about psychology, let's go back to the Bible and like that's what the Bible tells us. And yeah, you know what? Everybody loves themselves.
Yeah.
There's no command in the Bible to love yourself. Love others as yourself. We don't have to be commanded that because we love ourselves.
So
right?
the command
Maybe there's
to love
extreme
others
cases.
as yourself is just an example to say you love yourself so highly, or
Yeah. And okay, there's always the one-off case, but that's what we're talking about in general. So really low self-esteem is what happens when other people's expectations and vision of you doesn't match up with your own. So typically you have a higher view of yourself than other people do.
even if you don't explicitly say that,
Yeah, and you may not realize this, but you think you have a certain value or a certain worth, and you should be held in a certain esteem by other people, and then they don't. His point is like, that's low self-esteem. And I tend to agree with that, right? We base it so much on what other people think of us, because we don't exist in a vacuum or without other people, that, I would agree with that. Your self-esteem is really based on what other people think of you. And maybe your view of yourself is a little bit too inflated. And that just relates to the fragility that we talk about for people. So that was a little note. Another note I had was just a little bit of a book list.
Ooh.
Just books that we're looking at, books that we're reading. So I've got Fiat Ruins Everything by Jimmy Song.
Yeah.
So I know you've ordered that one, and I'll probably just borrow your copy when you're done. This is my MO, folks, by the way. I'm like, Brent, this great new book is out. We should get it. Yeah. And then he buys it, and I don't, and I just borrow it from him.
Yeah. Somehow you know all the content already. I don't know. You're just so wise. I actually have to read to learn things. Hey, that's a good investment. I'll pay $30 for the book if it's,
Absolutely.
teach me
so
something.
yeah, Fiat Ruins Everything by Jimmy Song.
Hey, actually, that's a really depressing. I bought that book, and then I walk past it every now and then. I'm like, man, I just want to read. I don't want to read that. That's so depressing.
But maybe we'll start a book club.
Okay.
The Price of Tomorrow by Jeff Booth,
Yeah.
I think, is also a pretty interesting read about. So these are sort of kind of Bitcoin based. But they don't have to be necessarily, right? Price of Tomorrow deals a lot with technology.
Yeah.
I don't even think he mentions Bitcoin, actually.
No.
But technology and how that will affect our lives going forward, right? And especially AI and things like that. Pretty insightful read. What else are we reading? Broken Money by Lynn Alden. We've talked about that one. That's a pretty good book as well, just about money, the money system.
Fiat Food.
Oh yeah,
I've
Fiat
been picking through Fiat Food.
You've been
picking out the good bits.
Getting some appetizers from there?
Yeah, checking out the garbage.
Okay. Yeah, well, okay, and that ties in a little bit to the episode we did with
with Mike Hutton. We're going to have him back on once we're done this book, because I think we're both going to read it and see where it goes.
Yeah. Any other books you recommend?
I think we should call listeners to tell them to send book suggestions in, right?
Oh, yeah, okay.
Another book, too, is Sovereign Individual. And I think we mentioned this once or twice in the podcast. But it's an interesting philosophy kind of about being a sovereign individual, being sovereign as opposed to a nation state being sovereign. So a nation state has kind of, sovereignty over all kinds of different aspects of your life. But can you reclaim some of those things? And what does the future look like for that sphere? So I don't know, that's a really interesting read, and a lot of people kind of reference that book, especially in the Bitcoin space, economics as well, when we're looking at the next 20, 30, 40, 50 years and how technology...
And you can see a lot of the things that they wrote about are starting to kind of come true as well, right? So
they obviously have one of those crystal ball things.
Yeah. And Yeah, I mean, they're not all, these are not all, I mean, Fiat Ruins Everything is written by a Christian. The rest of them, not so much. But I mean, there's a lot of wisdom that we can pick up on out there. And you read everything with discretion and with a biblical lens. But there's still lots to be learned. So those are some of the ones that we like and we're looking at. If you're, I don't know, nobody asked, but we're telling you if you're interested.
Yeah, we'll have to do some book reviews.
Book of the Month Club. So, okay, I feel a little bit better getting that off my chest, Brent. I don't know if you feel any better.
I feel great, Mark.
Okay. Okay, well, I think next time we're got a few interviews lined up, so you're not gonna have to listen to us rant. So
the actual smart people and stuff.
Yeah,
exactly. I'm pretty excited.
Yeah, me too.
I'm always excited, but this is gonna be really exciting.
Okay, well, here's a cliffhanger for you folks. So thanks for listening to us this time, and until next time,
steward your wealth wisely. Thanks for listening to this episode of the Two Stewards Show. If you like my voice better, click subscribe.
And if you like my voice better, click share.
If you like both, give us a 5-star rating.
To interact with the show, feel free to reach out at hello@twostewards.ca.
We'll see you in the next episode. In the meantime, steward your wealth wisely.